The next session is about innovations. Innovations in retail payments. I would like to invite Mr. Johin, Assistant Vice President, Business Development of Payit, to come on stage and deliver the presentation. Thank you.
Good afternoon, one and all. My name is Johin, and I head up business development for Payit, UAE's first digital wallet solution. And I'll first of all thank you, Gulf Madhyamam, for giving this opportunity for me to be here. What I'll do is, within the time allotted to me, take you through a small snippet of a journey of how retail payments have evolved in the UAE, and on how Payit today acts as a facilitator of digital payments going forward. So in UAE, actually, within the last 20 years or so, the change of payments in retail space especially has seen a very radical move from a predominantly cash-based kind of a proposition to a card-based solution, and then thereafter to digital payments. When you compare it globally, the retail payments in the UAE especially has moved at a very faster rate, and that's driven primarily due to credit card usage here in the country. The acceptance of credit cards have increased over the last 20 years. The introduction of government-related WPS, wage protection systems, where people who are predominantly paid out by cash are started being paid out by digital payments, especially through prepaid cards and payroll cards as such. Also, the transition was also facilitated by the vision of the government itself, the rulers of the country, where they mandated that by the year 2020 we need to move into a cashless society as well. So all these have played specific factors in this move from a predominantly cash to a mobile-based proposition. If you look at it even from a consumer point of view, the transition, that's where actually the transition has impacted the most. Today, around 45% of all cash transactions at end users happen through non-cash means, which could be cards, digital payments like mobile wallets and mobile payment applications. And that has seen a tremendous increase in the last couple of years, primarily due to the advent of contactless cards, Apple Pay, Samsung Pay, Mobile Pay, all these hardware-related payment instruments which came in to change the form factor in which how we actually make the payments. There have also been standalone wallet solutions such as Triple, Beam Wallet, which gives customers discounts and cashbacks when they do kind of different transactions. The government also has been a facilitator for such kind of payments with the e-Dirham program, where today all kinds of federal government payments are happening through this medium. In addition to all of these, this has also been driven by e-commerce players. The growth of Noon, Souk, and the rest have also given another avenue for people to come in and make payments remotely from the comfort of their house for items which they previously had to go and collect it. So while all this customer adoption has increased, especially at an end user payment stage, there still is a long way to go for us to be a fully cashless society. So today, there are certain elements within the market. While consumers are still using out digital payments, from a overall economy point of view, there are still 75% transactions which still happen through cash. This is primarily driven through B2B payments, where today still cash and checks are being used for merchant-to-merchant payments. There are small businesses who prefer to handle cash, primarily due to the costs associated with digital payments. Education is one sector which has been really hesitant to move into such kind of digital payments, primarily because, again, of the costs associated with it. And also there are local government entities which are only progressing into a digital payment sphere as we speak. So when we analyze as what are the reasons or what can it take for these kind of entities to move into a very cashless kind of a proposition. We found out there are 3 key areas which are actually impacting the decision. One, as I said, is the cost. Today, across the Middle East, the interchange rates which we pay are interchange. When I say interchange, is the scheme transaction charges that we pay are the comparatively higher side when compared to our peers around the world. Also, the hardware and setup cost to have a digital payment ecosystem, which could be through physical device, which could be through softwares and all, are all expensive, and this is still under innovation to become more cheaper and financially more viable for small businesses. From a revenue point of view, settlement times are still a challenge. Workflow and issues related to that are still a considerable challenge for small businesses and a hindrance for them to move into a digital payment sphere. And we also see the physical versus e-retailer kind of competitions, which still is driving people to be a little more hesitant into moving into digital sphere. Third is the brand value and the ability for them to stand out of the crowd. Today, just moving into digital or accepting digital payments does not guarantee you the ability to stay outside and be a market changer. And last but not the least is the value-based marketing, which is today still to be done. So you have the ability to do generic marketing, ability to go out and do a push of a marketing campaign to the wider public, but to have targeted value-based marketing is still something which is still to be developed. Which is where we came in. We looked at what we needed to do to provide that kind of an ability from a very digital kind of a perspective. And that's where we launched the UAE's first digital wallet. When we say the first digital wallet, there are different form factors of wallets today in the market. As I mentioned, there is Apple Pay, Samsung Pay. But these are all, at the underlying source of funds are all credit cards or debit card transactions. From a merchant perspective, it is only the only change he sees is in the way the payment interaction happens. The complete processing of the transaction happens similar to how a normal card transaction applies today. What we came out with was a store value based wallet solution. When we say store value, is the first digital wallet which has an underlying account with it. So when any customer comes in and downloads an application, you register and you get this digital account. This gives a lot of benefits from a customer point of view. One is security. He does not expose his funding sources or his income sources for making payment transaction. Second is that he has ability to make payments from multiple funding sources. So it's not just from a card or from his bank account or by depositing cash into it, but he has a one account which can accept different kinds of multiple funding sources. A third feature which we try to do it from a customer point of view is to provide them an application which caters to a 360 coverage of all their payment requirements. So this could be social payments, which is person-to-person payments today, which is a challenge in the UAE market, because unless you're in the same bank, you're not able to do it instantly. We have merchant payments solutions where we enable our merchants to accept payments in a very cheaper and faster method. We provide remittances. So today for customers, we are the first wallet solution in the UAE to offer free remittances to India. And fourth is a one-stop shop for all kinds of bill payments. So from a customer point of view, we actually went down to the customer to see what are their needs and their requirements to build up this kind of a proposition. From a business point of view as well, when we embarked on this journey, we looked at it from a view of how will it change or how will it matter for a company that who's also having the acceptance of card-based wallets, and what is the value which we can provide them in addition to that. So today Payit offers merchants a lower cost of acceptance. So when you compare to the different kinds of scheme kind of transactions, or you compare to even handling cash transactions, our solution we offer is having a lower scheme related fees. It also has zero investment in terms of hardware resources. So we have built upon a global standard of QR codes. And also what we launched 6 months back was sound-based payments. So today merchants are enabled with these kind of small devices which actually emit sound, and we are able to make payments through it. This actually removes the hassle of having specific hardwares, because we have all smart devices which can actually emit and listen to sound, and we are leveraging on this technology to make sure that we are able to have payments done in a very cheaper and faster manner. Third is we provide open APIs so that we can integrate into all your kind of, whether it's websites, whether it's your mobile applications, where we become a seamless and an underlying method for your payments, where we don't want to be at the forefront. We let you run your business, and we just become the facilitator for your payments. We also have faster settlements. So unlike a scheme transaction where the settlements could happen, say, after 2 or 3 days, depending on the agreement you have, for us, settlements can happen the same day itself into your bank account. From a workflow perspective, that's the benefit which we give. We give the merchants that additional 1 or 2 days for them to get more transactions. We also have the ability for our merchants to provide personalized marketing messages. This will include geo-fencing in terms of geo-tagging our customers, so that you are able to provide a merchant, a customer, the type of advertisement or an offer which can happen targeted to him. And finally is the data engine, which we provide analytics in terms of AI, where you are able to use our engine to understand the payment behavior of your customers and provide them with more customized solution. So with that, I come to the close of my presentation. We are located at the trade area in the booth, and we'll be more than happy to address if you have any specific concern on this. Thank you very much.
Thank you, Johin Josh.